Well, good evening, everybody. I apologize if you've seen me too much today. Some of you were in my Sunday school class this morning, and now you get me tonight. So I apologize if that's too much. You know, you can take the night off, close your eyes, it'll be fine. So I appreciate you coming tonight. We're going to talk about some of our financial principles. And tonight we are going to be talking about life insurance. But I want you to, as we start going down that road of life insurance, to be thinking about it not in the terms of just having insurance in case you die, right? And that's generally what we think about with life insurance. But I want you to think about it as a financial tool to help you and your family, okay? Because that's really what we're going to be talking about of, why you might need it or want to have life insurance. So I want to pray before we get started, and then we'll go from there, okay? Father, you're good. Thank you for today. Thank you for your goodness, your grace, your absolute wonderful love for us. And God, I thank you for the word preached this morning. Thank you for Mike and his willingness to do that. I do pray for Pastor Brian. Help him to feel better. I pray for Gary as he's away. Lord, just thank you for what you do at our church and through the preaching of your word. God, may you be glorified and praised through that. And Lord, this evening, may you be praised and glorified through our discussion on some financial topics, and just help us to do that in a good manner, Lord. In your name, amen. All right, so tonight we've covered a couple different things. We've covered some budgeting. We've covered some cost spreadsheets where you're looking at your income and your expenses, right? We've done that a little bit. And so we're just kind of getting started going down some of the road of financial planning. And Gary asked if I might teach on this topic while he's away. And so I said that I would be more than happy to do that. So let me just maybe start by saying that even though we're going to be talking about life insurance tonight, if you have a question that's off topic, it's fine. We can cover it. We can go there. Most of these financial topics we can weave in and out because they really do run together to some degree. Yes, come on in, Bethany. You need to hear this today. Come on in. Yes, this is very important. Yep. Huh? This is Bethany Anderson, 101. That's right. Come on in. So, yes, this is young employee needs to hear. This is what this is. Yes. All right. So I'm also not. I'm not blind enough to know to. Oh, the volume needs to go down. Am I too loud? Is that what you're saying? Yeah. You're not the first person to say that.
And I'm hard of hearing.
Yeah. Well, okay. Wireless. No. Mic. Oh, I wonder if this is room 2 or room 1. That's kind of fun. Master volume. Okay. We'll see. Is this me? Check. Is it going down?
You're a little bit better.
Is that better?
That's
okay. All right.
Yeah, we don't want you to go too
Okay.
far.
There we go. All right, good enough. Okay, thank you for telling me that. Let's mess with mics too, just because that's fun. No. All right, we won't do that. Okay, so as we get started tonight, we're going to be talking about life insurance as part of your holistic financial plan. Okay, so are there any questions that are out there in the room, maybe that we want to make sure we cover tonight on this topic, somewhere near this topic? Anything that's out there that you're wondering about? Yes.
Okay, you don't have kids. Why do you need life insurance?
Ooh, that's such a great question. Okay. If you don't have kids, do we need it? Okay, I'm going to write that down so I come back to it. I want to answer it right now. But no kids. Why life insurance? Okay. That's a good question. Anything else?
I've always wondered why I need life insurance and I have kids.
Yeah, why do I need kids? Why do I need kids? Why? Sorry, kids, if you're out there. Why do I need life insurance?
My husband has life insurance, but why do I need it?
Okay. Others? Those are good questions. Yeah.
Does someone my age need life insurance?
Oh, does someone your age, in your 60s, right? Right. So does someone in their 60s need life insurance?
Because we have so much that our wife wants us to die.
Right. Yeah. Right. How much does a second honeymoon cost? Right? Yeah. No. What? Oh, live stream. This is getting crazy. All right. All right. Hi, guys. How are you? Thanks for coming. Oh, all right. You missed all the jokes, though. So, hey, how are you? Good to see you. All right. Then the front row will be using you guys for illustrations and examples. So thanks for coming up here. Yep. And just anything to help. All right. So there's some good questions. Other thoughts? Yeah.
How do you figure out how much life insurance you need?
Yeah, how much do I need? Right? What's enough? Right, good. We will get to that, I know. Yeah. What else?
What are the different types of life insurance?
Ooh.
And are there some that are better than others?
Yeah, good. Okay, we'll get to that. Others?
How much it costs?
What's it cost?
Yeah.
That's a great question. You know, they're just giving this stuff away, right? Right, good. Okay, good.
What covers maybe?
What?
What covers, like life insurance, can they cover certain parts?
Yeah, well, not like, I mean, it's pretty much if you die. That's pretty much it.
Yeah.
That's the short answer. You know, it doesn't, disability would be if I lop off my arm, that'd be a different policy, right? So, but it's not like parts of you. It's all or nothing, pretty much. Okay, but we'll get to that, yeah.
Why do they call it life insurance when you die?
Right, yeah. Right. Yeah, Joe.
One question that occurred to me was, do I want to buy life insurance after I've had my life insurance policy that I've had for 10 years? How's that going to work?
Yeah.
And do I want to make it permanent?
Yeah.
So
Those are great questions, right? I have some now, and now all of a sudden I'm speeding ahead. I'm 45 or 50. Do I need more? And what type should I get as I get older, possibly? Good. Those are great questions. Okay. Well, let's go down these roads, and we'll get to hopefully all these answers to these questions as we talk together. Okay. And if we don't, it'll be fine, right? So hopefully we'll get to answer some of these. Okay. So just in general, I like the idea of life insurance. Think about protection. Okay. Protection. Well, you're protecting something, okay? So think about from the standpoint of you as a person, you all bring some type of value to your relationships, your family, your home, the people around you, right? So I'll use myself as an illustration here. I am 50 as of August, so thank you, yes. So far, 50 trips around the sun, or almost 51. Right? Because of pregnancy stuff. That'd be interesting, wouldn't it? If like when you were born, you were 9 months, and then you were a year, like 3 months later, right? But it's like, oh, first birthday, we could start that. So, but anyway, so life insurance is protection. You are protecting something. For me, when I was about 25 years ago, I was having some crazy pain on my side, right? And I wasn't sure exactly what it was. So I had some family drama going on in some of my external family, and I thought I had an ulcer. So I went to the doctor. I got some Prilosec for like upsettedness, and Prilosec is wonderful. What a great thing, So if you're getting sick a lot, it's like hardly burns or anything. Prilosec's great. It's not good for a long term, but it's good stuff. Anyway, that did not solve my problem, and about 2 months later, my intestine ruptured. And so we didn't know that at the time, but it had burst inside me, which is really painful. I mean, very painful. So I go to the emergency room, and I was sitting there, hey, Drew, and they basically thought I had the flu, so they said, just sit down, everybody's got the flu right now. So I was sitting there for what seemed like hours, and then someone recognized that I was in a lot of pain, and they let me go back to the beds. And then somebody realized I was literally pulling my hair out, and they gave me some shot of Wonderful, and that was great. I don't encourage drugs, but that was a good one. So it turns out they thought it was my appendix, and they took that out. They thought I was having appendicitis, so they cut into me right here. I've got the scars to prove it. And they took my appendix, and they were like, oh, it's perfectly healthy. That it wasn't that, but they took it anyway. And when they do that, they still charge you. So I was charged $1,100 after insurance for them taking out this little nubbin. And so then they realized, and I don't know what they're doing because I was literally asleep on a table, and so my view was they were just pulling my guts and everything out and looking for what was wrong. I think that's what they were doing. And so they found it. There was like a leak in one of my hoses. And so then they cut out 18 inches and they glued it back together, right? So fast forwarding, I was a young man. I was married. I didn't have kids at the time. So now I come into kid land, right? And so before I had kids, I didn't have a whole lot to protect. I did have a wife, and that was worth protecting. But now that I'm starting to think about kids, I might want to protect a little bit more, right? Because there's other things that come with kids, responsibilities, expenses, things like that. But my problem was now I have a problem, right? I have, when the insurance looks at me, they don't look at me as healthy, fun Jim. They look at me as having like the Black Death, right? They look at me as having, I've got all sorts of trouble. And so I am the classic uninsurable person, right? Even though I'm healthy and I do most good things, when insurance looks at me, they say that I'm too much of a risk, okay? And so I cannot get term insurance, whole life insurance, long-term care insurance, all that. I can't get that, okay? I'm not healthy enough, okay? So, lesson 1, you ready? While you're healthy enough, that's the time to think about life insurance. Life insurance is not for the ailing. Life insurance is not for the hobbled and the sick, okay? Life insurance is not for I've got about 30 days left on this body. You're not gonna get life insurance, okay? No one will insure you. Okay, so while you're young and while you don't have any money and you don't feel like you need it, that's when you need to think about it, okay? Because I know that we're all, as we go to the doctor, right, and we're like, I just have a little, weirdness in my back or something. And they're going to do a scan, and they're going to say, I found something. And then it goes in my permanent record, and then that starts the insurance to say, well, you may not be as insurable as you think. Okay, so protection, when we talk about life insurance, I mean protection, protecting your family, protecting your assets. A couple things we're going to talk through tonight really quickly. We're going to talk about risk. This is really small, isn't it? If you guys can read this, good luck. I'm going to talk about what is life insurance, types of insurance. Do we have enough? Do I have the right kind? And then at the end, we're going to talk about care insurance, which we might need at the end of our life. And then I left a place down here for questions. We've already got a few questions, and we might dabble into some of the other financial questions that might just be on your mind, okay? So that's my hope. Life insurance is kind of boring, really, to be honest. So I appreciate some laughing as we try to go through it a little bit. Okay, so talking about risk. And all the pictures don't go with anything. They were just in this like pre-prepared slide thing I have, so I didn't change the pictures. So these guys are all thinking about life insurance, I'm sure, right? Sitting around the table, think we should get life insurance? I don't know. Let me take some notes about your situation. I have no idea what this is about. So anyway, I thought it was fine. So the first thing we're going to talk about is risk. And there's a couple of different sides of risk. There's one side where you, the person that might want to buy life insurance, there's risk in your life that you're trying to manage, right? And that would be, if I die, who's going to be the breadwinner for the family? Where's the money come from? If I die and I have some debts, how do the debts get paid? If I die and I have kids, how are they maybe going to pay for college or some of those expenses? If I die, will there be any income for my spouse? Those are some of the risk sides on me personally when I'm looking at buying life insurance. The other side of that coin is the risk to the company that might issue the life insurance policy. So the company that might issue the carrier, the insurance company, they're taking on risk that they may have to pay a lot of money out if you die, right? So it's kind of a funny thing with life insurance because really if I buy a policy, I'm protecting against risks if I die, and I really am hopeful that I don't die. And then on the other side, the life insurance company is taking a risk that you might die, and they really don't want you to because they have to pay out if you die. So there's some risk involved in life insurance. Any questions on the risks? Yeah?
At least they don't want you to die.
Yeah, right.
Yep.
All right. So what is life insurance? I'm going to put this under the heading of a policy. A policy is basically a contract, right? So in life insurance, there's a contract between you, the person that's buying life insurance, and the company that is selling it. And it's basically just an agreement. I'm paying so much money every month or every year, and I'm paying for typically what's called a death benefit. So you might, as a younger person, you might think, oh, if I got life insurance for $100,000 or $200,000, that's plenty, right? As you get older and you actually are paying for things, you might realize, oh my goodness, if I die early, right? And maybe I back up and say this. When I just said if I die early, I'm speaking in insurance terms now. I'm well aware it's all in the sovereignty of God, right? So I'm just talking as insurance stuff, right? And that's kind of terms if I die early, right? The average lifespan is around 80, 82. That's average right now. Those mortality rates go up a little bit just because we're living longer. People are healthier. We have better care at doctors. They can do all sorts of health procedures. We can change out knees and elbows and heart valves, all sorts of things. When I was in the 7th grade, I remember being out on recess, and someone might say, my grandfather or father is having a triple or quadruple bypass. Anybody remember that? And that basically meant at that time they were going to cut you open with some type of saw, crack your chest open, and they might still do some of that, I don't know. But it was kind of touch and go. I mean, it was really almost like, I'm not sure that person's going to get off that table. Remember those days? That was serious business. Today, it's like they might line up 6 or 7 of those during the day and just kind of assembly line, right? So come on in. So that's how that might be. Healthcare has gone great lengths as far as mortality rates and things like that. So people tend to live a little bit longer today. A policy is taken out on a person to provide a guaranteed benefit. So in the financial world, you can very rarely, if ever, say the word guarantee. In the industry of insurance, you can say guarantee, okay? Because an insurance company has to be able to pay you what you have signed up for. It's an agreement. And so it's a guaranteed benefit that if a person dies while the policy is in force, and what that means is, to say that a policy is in force, it means that you're current with your payments, right? If you have a term policy, you're paying X amount every month, you're paying, it's in force. If you stop paying, they might say that you've lapsed your payment, and then they might say that you've null and voided the contract. Okay, so if someone passes away or dies while the policy is in force, they will pay out. There may be different values on insurance policies. The value is most determined by your need. Okay, so so there are people in this room that have a $20,000 life insurance policy through work. Maybe if you worked at the state of Illinois, and maybe you have some type of a policy that pays for your burial. It might be like a $20,000 policy. You may have something like that. Okay, so if you're a state worker, you might have that. If you bought a term policy when you were younger, you might have bought a $50,000 or $100,000 term policy, maybe $250,000, $300,000, up to $500,000. And if you had need, you might have even had $1 million term policy. So term insurance, there's different values on it, right? There's different values on all this. So the point of this is that it's a policy, right? There's policies. It's an agreement. It's a contract. And some of these contracts go longer than others, and some of them are short, some of them are long, okay? Depending on how they're written. Any questions so far? All right. I like this little picture of a puzzle because I think that's what life insurance does. It provides a piece of a financial puzzle, right? It isn't the only piece, it is a piece of your financial puzzle. You might have your savings account, you might have a 401k, you might have some invested money, and then you might have life insurance. It's a piece of your financial picture. Types of insurance. So there's a couple of different things that we could say here. In general, and some of this is just general talk of insurance. We could go into the weeds a little bit on some of this, but I don't think we need to for what we're doing tonight. What tonight is designed to do is give you an overview. So you've got group policy. A group policy is if you have I'll use the state of Illinois again. If you're a state worker, right, you have what's called a group policy. That group policy is if you are alive and you work at the state, even if you don't do much work at the state, you are in their group policy, right? And so a group policy basically means as long as you work there, you have this insurance. Some insurance coverage from work will carry over even after you don't work there anymore. Okay, so because I told you I don't have insurance, I can't get life insurance because of my health condition, but I do have a group insurance policy that I up as much as they'll let me every year. Okay, and so that's my policy, right? And so if I were to die, that would pay my life insurance. But if I don't work at my current employment, that would go away. All right, so that's group insurance. We're going to go on to what's called term insurance. Term insurance is kind of like a temporary insurance. Usually, a term insurance policy could go 10, 20, or 30 years. Okay, a term policy is typically a lesser cost insurance. The thinking with a term insurance policy from my perspective would be if you're paying smaller amounts for your term insurance, and I'll just throw out some numbers here. It doesn't mean this is an actual number. It's just using a number. So let's say I was spending $50 a month on this term policy. What I would want to do over here is I might want to invest money in other areas because I know this is going to go away at some point. This is my 15 or 20-year term policy. I hope I never have to use it. It's my in case of emergency. It's my parachute. So I'm spending a little bit of money here. Over here, I'm going to invest the rest of it in other vehicles. This also could be what I might term, but I'm mixing terms. This is insurance. Over here, this is an investment that I'm kind of treating like it's my nest egg. Okay, so that's term insurance. Term insurance is just what it sounds like. It's for a term. It's for a period of time. It's not going to be there forever. My wife has term insurance. We got it on her once we started having children, and I couldn't get life insurance, right? So we got Emily some term insurance, and I think we did $300,000 for her policy, and I think we're 20, we're at least 22 years in, and so I think it's a 30-year policy, so we probably have close to 7 years left to go on that policy, and then that will go away, okay? So we're insuring her to get through the kids' upbringing because even though she stayed at home for most of her work career, that she was very valuable, right? You think about what would I have to do to raise my kids in the same manner, right? If she would have passed away when my kids were 5 and 3 or something like that, right? So what would we have had to do? Well, I had to still go to work, so I can't take care of the kids. Maybe the grandparents might have wanted to do something there, but I don't know, right? I can't bank on that. So I might have had to, maybe I had to hire a nanny or something, right? So we wanted to have a supply of money that if I had to pay Doug to watch my kids, that he would, right? So that's what that was for. And eventually that's going to go away because the kids can almost raise us now, and so we don't need that as much. But at this point, it's not worth getting rid of because it's fairly inexpensive because we bought it when she was young, right? That term has a price and it locks in. It doesn't change, okay? All right, questions so far? We good? Yeah.
So it might be a stupid question.
No stupid questions.
All that money for that 30 years, after that 30 years, what happens to all that money?
The insurance company says, thank you very much.
No, you lose it?
Well, I didn't lose it. Remember when we went back and we talked about there's risk? I pushed my risk onto the insurance company. I said, you take all the risk of having to bring nannies in for my kids. You take it all. That's what I did. I paid for that, and I did it happily, right? So now I can't say, well, she didn't die, so now what are you going to do with it, right? So I know what I paid for. I did it willingly. I was happily doing it, right? So I didn't lose anything. I managed risk is what I did, okay? Because if something would have happened when the kids were young at age 6 and 4, whatever they were, and I had to out of pocket, that would have changed my financial picture dramatically. Okay, so there was cost either way. Does that help you? Okay, okay, good. It's a good question.
So the cost is just that you don't have to pay as much as you would have had to pay.
Okay. So maybe I'll just talk about that just for a second, because you asked two questions about cost. When you're young, term insurance is very inexpensive, right? And we could put some dollar values on it, but there's a couple of things that derive the cost of insurance. Your age, your health, sometimes, and you may not like this, but sometimes your gender, okay? It could be your occupation, whether you smoke and don't take care of your body is another one. Those are all factors that might change how much you have to pay for insurance. Also, how healthy you are. Someone that's over here that runs 20 miles a day, they might have some great insurance rates. Someone over here that eats Cheetos all day and hasn't run a lick in their life might have a higher rate, right? Because their health scores may be different, okay? So that's just true. And so my runner might have to pay like $20 a month. My Cheeto eater might have to pay $40 a month, and that's just true. My runner might have to pay $20 a month. My Cheeto and smoker eater, no, the smoker, you don't eat the cigarettes. The smoker and Cheeto eater might have to pay triple that, right? Okay, so the cost might change based on health, okay? That's a good question. It's very difficult to say an exact number without taking you through the underwriting process, okay? Yeah.
What sort of health stuff affected? Like if you had like a shoulder replacement, or you know, like.
Yeah. Some things are normal, some things aren't, right? So some things like, I need glasses, normal. Something that's not, like none of my valves in my heart work, not normal, okay? So you see the difference? Yeah. So some things are insurable risk and some things are not. I would say probably 65 to 70% of Americans over the age of, let's say, 55 or so are taking some type of a cholesterol drug, maybe taking some type of a heart medicine. It's very high, the amount of people that are on statins and those kind of things, right? And so they kind of turn a blind eye to a lot of that because so many people take those kind of things. They would like the cholesterol levels to be normalized, things like that. But there are aspects of your health that, like for me, my Crohn's disease, they do not like that. Okay, they look at that, they look at me and they say, "Oh, that's not going to be good," right? And it isn't good. I mean, it's terrible. So I don't blame them for looking at me and saying you're not an insurable risk, right? Because they're running a business. It's a business. It's not like they're just being nice. Right? So you have to look at it like that too. Yeah, Drew?
This is a question. So when we were signing up for insurance, our advisor, we told him that we were going to move into a third world country. It's going to be crazy, and that's why we wanted to, protect ourselves. And he was like, "Well, have you actually moved there and you bought plane tickets and joined the company?" I was like, "No." He's like, "Well, then you can get a much lower rate as if you were just a normal person here." So it was cool to see that. Like, if you're expecting a move, but you haven't actually engaged in that, like if you're to go work on an oil rig or something,
Yeah.
it might be good to get it.
Yeah, you definitely don't want to be in harm's way when you're saying, I need this, right? Because all of a sudden there's trouble. Okay, so that's a group policy. We talked about term policy. I'm going to talk about convertible term just because I think this is important to know. There are some term policies that, let's say you bought it when you were 25 years old, and you're young and you're dumb and you're fine, right? You're wonderful. You don't make any money, but you needed something, and so you're paying your $20 out, and it's all great. So then life happens, and you're marching along, and now all of a sudden you're 46 years old, and you've got, 4 or 5 years left on your term policy, and you go to the doctor and they say, "Ooh, Jim, you've got Crohn's disease." And my insurance policy is going to go away in like 4 years. With a convertible policy, it gives you an opportunity to change that over to a permanent insurance and not having to be rejected, right? You may have to pay more in premium, but you can still get insurance. My situation right now is I can't get insurance, right? So what do you want? Do you want to not be able to get it, or do you want to maybe have to pay a little bit more? Okay, so a convertible term policy might be advantageous, especially young people, when you're looking at policies, looking at something, can I convert it to a permanent policy if I need it in case my health changes down the road? Okay? Whole life, variable life, and universal life, they're what we would consider permanent type insurance. And under those insurances, you buy a set amount of insurance. They call it a death benefit. So you might buy a $100,000 or $200,000 death benefit, and you are going to pay a set rate for the rest of your life until you die. Okay? A lot of those will also accumulate what's called cash value. So you might get a little bit of extra on top. And sometimes as you get older, the cash value might be able to even pay some of the policy premium. Yeah.
Are the whole life policies adjusted for inflation?
Some of them can be. They're all different, right? So I'm painting with a very big brush here because there's just hundreds of all these, right? But yes, some of them can be. You can actually elect that as part of your policy. There's also what's called riders that you can put on these three. A rider might be something that would pay you a income benefit. You might even get a care rider put on there that might help you if you needed care at the end of your life. Okay? So another way to look at this one typically doesn't cost you anything. You don't know that you're paying anything because it's at work. This one, the term policy, is usually pretty cheap. These three are your most expensive options because they're permanent. Okay? But they also don't go away. Okay, so if you get a heart problem when you're 56 years old, you don't lose your insurance, okay? And you can keep it all the way through as long as you pay for it. So why might I want life insurance, right? Again, okay, go ahead.
With term insurance, though, aren't they like wanting you to guess when you're going to die?
No, they don't want you to guess because the actuary that's figuring out your rate is actually thinking this is when you're going to die. Okay, and so again, most people die later on in life, and so they're rolling the dice just a little bit. They're saying, I don't think you're going to die right now, so I'll take your premiums, and we'll go 20, 30 years. I don't think you're going to die. We're going to roll the dice on that. Okay, so they're thinking you're not going to die. They don't necessarily need you to know when you're going to die. No one knows when they're going to die, right? That's why we're managing risk. It's a risk, right?
So do they tell you? So they know? Do they know the exact?
No. Wouldn't that be something? Yeah, it'd be crazy. Yeah. So I signed up with this life insurance company, and they told me when I'm going to die. No, they didn't. No one knows that. Well, the Lord knows that, and it's wonderful. But yeah.
I was going to say, the point of the term isn't when you're going to die, but trying to manage how long your risk is, right?
Yeah, you're just, and really, to be honest, like life insurance, even on the permanent side, there's things that are risk out there for you. Your risk is going to change as you go through life. And so it might be necessary for you to have a term policy for when you're younger and then go to a more permanent policy as you get older. There's maybe some risk in there that you need to manage, okay? And we can talk about that a little differently later. What am I insuring against? I'm insuring against loss of income. If I were to die today, all right, Emily works as a preschool teacher, and she does a great job, but it would not suffice, right? It's just not going to do. Okay, so my insurance that's on me, my group insurance, is to help cover my income. Some people have debts, okay? A lot of you have managed your household very well, and you don't have a lot of debts, but a lot of people do. It's very average in the United States to have between $30,000 to $60,000 of debt, okay? That is what's considered normal right now.
Not mortgage.
Not mortgage, outside of mortgage. Outside of mortgage, excuse me for 1 second. So I'll talk about that just for a second because that's always a question that's out there. Like, what if I have house debt or car debt? There are some debts that I would say are good debt, even though I don't like you to have debt, and there's some debt that's bad debt, right? Good debt would be like putting money into your home. That's your biggest savings account, okay, for most people. That's the biggest savings account. You have to buy a vehicle, be responsible with your cars. Don't be upside down in your cars, but that's not bad debt. Sometimes that's necessary. You have to be able to drive to work, okay? Bad debt is going into debt for things that you don't really need, you know? Toilet works fine, but I need a new one, you know, that kind of stuff, where you're just changing things out just to change it, Some people are very big spenders and they run up credit cards and things like that. You just wouldn't believe some of the stuff. So there are income needs, there are debts that people may have. Education. Education right now is very expensive. To go to pretty much a public university is about $25,000 a year. That's the average right now. Private schools start around 40 and they can go all the way to 100 or more, right? And then there's scholarships that are in there. A lot of these private schools will come down to closer to 25 and 30,000, but education is very expensive right now. Mortgages, someone passes away, sometimes it's nice to pay off the mortgage, right? So sometimes life insurance money can be used to pay off mortgages. Doesn't mean you have to pay it off, but you could. Okay, again, these are just expenses. Life insurance can also be used as a possible inheritance, okay? Sometimes people want to leave money for family after they're gone, and so it provides an opportunity to do that. The most important thing, and the thing I want you to take away more than anything about this discussion, is that life insurance passes tax-free. Life insurance is a tax-free benefit, okay? So if I were to die today and I pass my IRA on to my family, that is not tax-free, okay? You may be looking at between, depending on what people's tax rates are, between 28 to 32%, let's say, of tax on an IRA, okay? There's a lot of money that goes in, that has to go out to the government, okay? So life insurance passes tax-free. I'll just talk about IRAs and things like that real quick because it's just good knowledge. So if I were to pass away today, my retirement money, my IRA, goes to my wife. She has no need to start using it right now, okay? She does not have to take out money until she's 73, just like I would, okay? So the new distribution year is 73 years of age, okay? However, if Emily and I got hit in a car accident and we both perished, okay? If that were to happen, and it went to my children, right? My kids are not my spouse, and so the current rule on IRA money is that not insurance money, but IRA money, is that the kids have 10 years to take all that money out. Okay, the government wants their tax money. Okay, so that's the rules on that. So when you think about why might you want to use insurance, if you could pay for an insurance policy using some of the money you have to take out of your IRA, right, to put it into an insurance policy where you might have a tax-free benefit, that could be a good way of thinking. Again, it's just financial strategy. So there's a few thoughts in there. Okay, how much is enough? How much is enough? This varies wildly, okay? My enough and your enough may be ballparks worlds apart, okay? And here's why. Your home may be really expensive, and you have all sorts of debt. And maybe you have 5 kids that have to go to college, and maybe you have a spouse that you need to take care of, right? And so your cost, your insurance needs may be really high. Whereas maybe this person over here has no children and just has a spouse, and they don't have any debt on their house, right? And so their insurance needs may be a lot less. Okay, so there's a couple thoughts there. A simple calculation, which is kind of like industry standard in life insurance, and I don't know that it's actually enough in today's world. When I was a kid, it was kind of said on the playground, if I had $1 million when I retire, it's going to be great, right? $1 million doesn't go as far as you think anymore. It sounds crazy, but it just doesn't. Because from the age of, let's say, 60 to age 90, whatever's in there, we don't know our days, the Lord does, but that's 30 years. That's 3 meals a day. That's a lot of money, right? You follow what I'm saying? So it takes a lot to go those years. And so we have to be careful with how much we're looking at there. So the way we would really want to do this to be right is to do an analysis of your financial picture. What is your true need? Okay? What do you really need that life insurance to do for you? And the other thought is, what are you trying to solve for? Right? Are you trying to solve so that your home's taken care of, kids' college is taken care of, and everybody gets $500,000 as an inheritance? What are you trying to solve for? What are you doing with this money? Okay, what are you trying to do? Different stages of life are going to dictate different needs, okay? A newly retired person who's paid off their home probably has a different need than someone that's not paid off their home and just retired. Different needs. So we want to pay attention to those. Questions on these things we just talked about? Okay. So another question sometimes that comes up is, do I have the right kind of insurance? In order to understand this, we really need to do an analysis of your current policy. What do you have? Is it a term policy? Is it a whole life policy? How many years till your term policy's up? What do you need those insurance dollars to do in case something happens to you? We also need to look at your current needs. For some people may come with I bought this whole life policy. I've had it for 20 years. It's just this policy. It's this much money. And sometimes it doesn't really address their true need anymore. When they bought it when they were 30, they had this need. But now that they're 50, 55, or 60, they have this need over here. And it may not include why they bought it, but way back there. So you can do what's called a 1035 exchange and exchange one policy for another as long as you're healthy enough to do that. Okay? What kind of policies might you want to exchange it for? The biggest need I'll get to in just a second. But some factors to think about when you're thinking about insurance. We've covered some of these. Your health, how much does it cost? What kind of coverage do you need? How old is the person? And then looking at the true insurance need. Okay. So I just talked about maybe exchanging policies because there may be a reason. And here's the reason. The reason is this, that between 7 and 8 people out of 10, roughly 74%, need some type of care in their life. Okay? That's statistically accurate. What that means is there may be a need to have someone come into the home and take care of you. There may be a need to go into an assisted living facility. There may be a need to go into a nursing home. And here's the thing, most people live under the assumption that Medicare, the government, pays for those things. And it doesn't. Okay? And that's for most retirees, this is the biggest hole in most retirees' boat, is what it may cost to have care in the latter parts of their life. Typically the last 3 to 4 years. Men typically 3 years, women between 4 and 7 years of care. Okay? Right now in the state of Illinois, that year of care runs between $6,000 and $8,000 a year. A month. Okay? And that really just depends on what kind of care you want, right? Sometimes it's what type of facility you want, how good the meals are, those kind of things. Whether they have bingo, movies, there's all sorts of different care levels, right? Some of that also could be if you're in a bed by yourself or a room with a buddy, So there's all sorts of different needs there. So that's just true. I think this is one that a lot of people don't realize is the expense at the end of life, right? If you extrapolate out about $8,000 a month in Illinois, that's roughly, $96,000 for a year? If you have dementia issues, mental stuff, right, Alzheimer's, things like that, right now in Illinois, that's about $10,000 a month for mental care, okay? So you can see what happens to a financial portfolio that may have to pay for some of this. It can really get taken down quickly, okay? All right. Questions about any of that? Okay, good. All right. Had a few questions here. There may be others that... all right, so someone asked, if I don't have any kids, why might I want life insurance? Okay, I don't have any kids right now. What do I need it for? Well, number one, you might be younger. You might be wanting to have kids, right? So you kind of have to set the table a little bit, right? Also, in a marriage relationship, there's a certain amount of dollars that are being brought in by each spouse. And sometimes if you weren't bringing that in, what we tend to do in our relationships, we tend to rise with our spending. If you're making $20,000 this year and next year you're at 35, you're probably going to make your spending go up just a little bit. Okay, that's just what happens. That's what we do, right? All of a sudden I can buy a bigger TV and a shinier boat, right? That's what we do, right? Money tends to run through your hand like water, okay? Dave Ramsey uses a phrase, give dollars a name. And I like that. It makes sense, right? So if I'm going to make an extra $500 this month, maybe I give it a name of that savings, and I actually do that and put it over there. Because if I leave it in my checking account, there might be a chance that might find its way to, Menards or something, right? I mean, that's just what we do, if we're honest. All right. So I would say while you're young, and you may not think you need it, your health may be the fact that you can get it. And if you wait until you're X number of years down the road, your health may not be the same. Also, those insurance costs may be higher, right? So I would definitely encourage you to be thinking about that if you're thinking about a family. Another question that came in is, I don't have life insurance. Why might I need it? It's the exact opposite. You may have a job and you provide some income to the family, and if you're not there, that income goes away. Also, if you have little bunchkins, right? Someone's got to take care of the little bunchkins. That's just reality, right? Sometimes we live in a world we think, oh, grandma and grandpa will do it. Grandma and grandpa may not want to. They may have other plans, right? So you can't assume that, okay? And last time I checked, having someone watch your kids does cost a little bit. Okay, I'm older now. Do I need life insurance? So the older people, and this gets tricky, because as you get into the 70, 71, 72, 73, 74, 76 realm, right in there, even if you're healthy, the insurance companies are like, I don't know how much risk I want to put in there, right? So we start to become uninsurable based on, mortality risks and things like that. So that's just real. And so I wish that weren't the case, because I've got wonderful people that I care very much about that aren't as young as they used to be. Okay. How much do I need? It's a very different question for everybody, right? When you're young, you don't have very much money. Sometimes you get what you can afford, right? Maybe you can afford the $20 a month, but doing $100 a month is too much, right? So that's how decisions are kind of made when you're first starting out. As you have more resources, now you start thinking about, what do I actually need to solve for? I'm solving a problem. It's a math problem. I have a $300,000 home that I owe $200,000 on. I have some medical debt of $60,000 that's out there. Took out a second mortgage on the home equity line. That's another $60,000. And if I die, what's going to happen with that? So now that's around $500,000 of life insurance I need just to cover that before I give my spouse a nice second honeymoon and an income. Okay, so now you need to have a little bit more there. I'm joking about the second honeymoon. Okay, I'm not sure what that says. It looks like tuppery. Why would I write that? Okay, someone asked a question about something with t. It's really a problem, my handwriting. All right, if you asked a question and it started with maybe a T, ask me what that is. Okay, and then someone asked a question, what does it cost? It's variable costs. The more temporary the insurance, the cheaper it'll be. The more permanent it is, the more expensive it will be. For people that need some long-term care coverage, those prices vary wildly as well. Usually, as you need care coverage, it's going to also, women, you're going to live longer in care just statistically. You just do. And so because of that, yours will be more expensive. Okay? So, okay. All right, we've covered a lot of ground. Other thoughts?
Question, should you have both group and individual life insurance?
All right.
Because I have group right now, but do I need to take out individual?
All right, so you're a wonderful employee. I'm so glad you work for me. And you have our group insurance. It's going to, as long as you work here, you've got that. And that's really good. Until I walked into the break room and you were eating my lunch. And now I have a problem with you. And I also noticed that you're on your phone sometimes on Facebook. And I noticed that sometimes you come in a little late. And maybe I need to replace you, right? And so somehow along the lines, maybe you don't work for me anymore, right? I'm just giving you a scenario. That I don't think you do any of those things. So at some point, maybe you don't work for me. Maybe you took a different job, right? And now you go over to this paper company over here, and they don't offer a group policy, right? You worked at this company over here for 15 years. Now you leave at age 45. You come over here because they're going to pay you more. There's no insurance policy over here. And now you're older, and maybe you have a slight health problem, and you're not as insurable over here. Okay? So that's why I might tell you that while you're young, while you're healthy, while you have a little bit of spare change, think about it. Okay? Yeah.
What would kind of be like if you're looking at like a whole life for less amount versus like a term for probably more if they were like equal in like the price? How would you assess that?
Okay, so this is just a me preference, right? So I'm just giving you a Jim preference. It does not mean it's right. It's a Jim preference, okay? I don't think younger people need, for the most part, they don't need permanent insurance. I think most people need to cover their bases in case something happens during those 20, 30 years while they're building their assets over here, right? The idea of self-insuring, okay? So I would encourage you over here, get a term policy, run with that term policy. Any young person, I would say, to do this, okay? And at the same time, I would be bolstering your 401k at work. I'd be investing on the side. I would be having funding your Roth IRA, those kind of things. I'd be funding over here. This is the important side. This is the emergency side, right? Then as you get towards the age of 50 and you actually need maybe insurance for something else, we would have a different conversation. So while you're young, that's what I would do, okay? Because I think the whole life policies can be more expensive in the long run if you don't really need that, right? Again, this is where that analysis of your true need comes into place, and that's what I would tell you.
Jim, what you say, though, that there are people who don't have the risk, like these young ladies in the front, with, they're in their 20s maybe, they're not married, they don't have any financial responsibility at this time.
Yeah.
And there may be people that are old and don't have any financial debt.
Right.
They're financially secure.
Right.
They may not need it.
There's a lot of people that don't have life insurance. Again, this is a tool, okay? This is a piece of the puzzle for it's a financial tool, okay? So you're right. If you didn't get life insurance, young ladies up here in the front, if you didn't get it, you're fine, right? But if you want it when you're older, you may pay more for it, and you run the risk, like I did, of not being able to get it because you may have a health issue. Yeah, Bob?
That convertible term, would that maybe be wiser? That way, when he does get older, he can convert it to something?
Yeah, I think there's wisdom in that. That's why I think it's good to talk that through. Usually yeah, a little bit. It's going to cost you a little bit more. Usually your generic-y insurance won't have those type of policies, but some of the a little bit more reputable companies might have something like that. You may pay a little bit more for it, but that's the reason you pay a little bit more is for the ability to make that decision if you need it. Okay.
That way you would be uninsured
That's right.
down the road.
So you mentioned, when you're talking about the IRA, your beneficiaries other than your spouse would be taxed on that. Does that matter whether it's a Roth or traditional IRA?
So the Roth doesn't have the taxation, but it still has a time period.
Yes,
Okay.
But for the beneficiaries, it doesn't have a taxation.
No, there's no taxation on Roth money ever.
Just clarifying that.
Yep. So if you went down the Roth IRA mode, the government says thanks for the tax money, and they really don't care anymore. Okay. But on the traditional IRA, every dollar that comes out, both what you put in and what you grew, is going to be taxed.
If you retire from the company, can you still get the group life insurance, or does it just depend on?
So sometimes you can pay for that benefit. Usually it's through health insurance using like the COBRA system. It costs a little bit more, but sometimes that is an opportunity. You might be able to pay for their health or their life insurance coverage. Most of the time you wouldn't want that.
I'm on the federal one, so.
Yeah, most of the time you wouldn't want that because you're hopefully going to go over here and they have a group policy too. But
If you retire.
So retirement, that usually does not come with you. If you are a state or a federal employee, you might have a small life insurance policy. But let's say you worked for Jim's haircut service and you retired from here, you wouldn't have a group policy. Okay. I don't own a haircut place. I've been thinking about starting one, but. All right, anybody else?
Do you have any companies you recommend?
So, yes and no.
Just knowing, are they all created equal or no?
Yes and no. And I hedge on that mostly because what you want on your end is someone that you know and can answer a question and a call, and someone that's going to be there. And sometimes your less reputable companies might have a lot of turnover, and they might be who knows where, and it may not be quite as easy to get a hold, right? And they can charge you a nickel for it because no one's ever going to talk to you, and it's really hard to do things. And whereas some other companies where they're well staffed and things like that, and they may be a little bit easier to work with. So it's no different, right? We all know where we shop at different places, and this place over here we shop, and it's like, oh man, I know I'm going to have narrow aisles, and there's craziness going on over there, and if I shop over here, I'm going to pay a little bit more, but it's never crazy, right? It's no different, right? So yeah, there are some companies that that tend to have a little bit more reputable, and they might take care of you a little better. I would tell you, think about companies that start with the letter P, right? So that would help you, right? So okay, yeah. So I can always talk to you offline about stuff like that too. Okay, yeah.
Can you explain what variable life is? I don't really know.
Yeah, so it's more a variable life, variable universal life, whole life. These are all a permanent insurance policy, and the way they work is they basically have some investments inside them, and so they're wanting to, they're going to tell you they're going to pay you so much money out if you die, as long as the market where it's invested makes a certain percentage. Okay, there's usually a second table of numbers in case the stock market doesn't pay anything. If it doesn't produce over your lifetime, you would get this. That's usually how that works. Okay, so it's just a permanent insurance policy, but it's never going to go away. For someone like me, if I had gotten that before I had my Crohn's surgery, that might have been an advantageous thing for me because I'd still have it versus not having it. Yeah.
Can you talk about a little bit more about the opportunity cost of the money that we would be spending on life insurance?
Mm-hmm.
If we spent it somewhere else, I don't know, what?
Yeah. Okay, so it all comes down to this, and especially when you're young, everything's really tight, right? Like we just don't make very much money when we're younger, and it's like if someone wants to go to the movie and you're like, whew, it's a $20 bucket of popcorn. I don't know, right? And so we stay home and we do the $3 bag of popcorn because we're trying to save money. As you get older, usually that money flow tends to loosen up just a little bit, right? So there are some opportunity costs with life insurance, especially when you're younger, because money is a little bit more scarce. And so sometimes when you're younger, especially, you may have a little bit of an altered lifestyle. You may not be able to have your Netflix and your Hulu account, right? Because that money went to life insurance, right? So there are some opportunity costs of having life insurance, just like anything else. Is that what you're asking?
More like if that money that you would put towards life insurance, what's the opportunity cost of what you're losing? If you invested it somewhere else?
Yeah. Okay. So earlier I mentioned that word guarantee. Do you remember that word?
Right.
Okay. So
the tax stuff too.
yeah. So in life insurance, there's a guarantee. If you died at age 40 and you had a $100,000 life insurance policy, they're going to pay out your family $100,000. That's a guarantee. Let's say you didn't buy that policy and you decided you were going to take your $20 a month and put it in the stock market, right? And you're kind of rolling the dice, see how we do, see if the market's up or down, right? And you might do well. You might do well for a couple years, and then the market comes through with COVID, and and all of a sudden you're down 36%. And you're like, what happened? That was all my insurance money, right? And then you're like, I need that money now, right? I want the money I was supposed to have in there. Well, there's no guarantee in the market. Okay, so that's one thing you're paying for with insurance is that you're paying for that guarantee as well. It's not wrong to put money into the stock market and mutual funds and things like that. That's why I would tell you to do both. buy the lesser insurance if you want insurance, and then take the other side of that of what you might have paid for a permanent policy and put it into the market. Then when this one goes away in 20 years, you've got that one. Okay? Does that help? Okay. Other questions?
Did you answer if old people?
Yes and no, I didn't. Here's the answer, and it's not always a fun one, but here's the answer, is that as we approach older years, we're not as insurable as we used to be, okay? And so remember, an insurance company is a business, and they're managing risk, right? And if we know that the average mortality risk rate is around 78 to 82 years of age, that's what we typically are, but it's getting a little better most of the time. I won't say all the time, most of the time, for insurance purposes, they may not want to insure you, right? However, I would say this, if you are north of the 65-year-old person, in general, I'm speaking in generalities here, so just know that the biggest need that you need to think about is what happens when I need some care, right? How does that look? And even if it's not to have it taken care of through life insurance, you ought to be working on a plan, right? What does that plan look like? Who are you going to call? Is it your children? Do they know that they're the call, right? I want to live in your basement, right? Do they know that, right? Is that the plan? And so this starts to become an uncomfortable conversation because there's things that happen as we get older, right? We have to think about it. Sometimes people will say like, oh, I'll just have the people from church. They love me. They'll come take care of me. And that's great and all until you have to use the restroom. Or you need a shower, and there are things that you may not want people from church or even your family to do for you, right? And so there may be a reason to pay for some of those services, and that's what sometimes those long-term care plans can help with. So highly encourage you to be thinking about those things, but at some point we may age out of the availability for some of that. So if you're thinking about it and you're healthy and you can afford it, I would tell you to look into it sooner than later, because later may be too late, okay? All right. Thank you, guys. You're good listeners.